the biggest challenge on a commercial is leasing. In residential, you just kind of put up a for rent sign and you get 20 people, applying. But in commercial, you really have to work for the lease.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. Excited to have Carlos Rovira today. Carlos, how are you doing today?
I'm good, Todd. How are you?
Man, I'm doing well. I actually said, hey, say your last name for me. And I actually had it down and then I messed it up. So
Still botched it, man. It's okay. It's all right.
That's how it goes.
No worries.
Yeah.
I get
well,
the
I actually
Rivera
wanted to say
a lot. Rivera.
That's actually what my
Mexican
brain.
Last name. Like, no, Rovira
right.
is it.
That's exactly it. That's what my brain was like trying to think, like Rovira.
Carlos Rovira.
Perfect. Love it. So anyways, RG Capital Partners, full-time real estate investors, been purchasing and managing income producing property since 2009. You guys have experience syndicating, managing both commercial and residential properties through Florida, Midwest, and the Caribbean. I want to dive into the Caribbean a little bit. That's kind of cool. And you came from the tech industry. So we'll dive into a little bit of, what you apply to your business today. So with that said, Carlos, why don't you give our listeners a bit more about your background and kind of what you guys are doing today?
Yeah, totally. Okay, well, just traditional. I'm, traditional college grad. I'm from Miami, Florida. Grew up in an immigrant family. We're Cuban, so the right thing to do is the conservative thing, which is to go to school, get a degree, and get a job. So I did just that. I graduated from the University of Miami with a degree in software engineering, and the Monday after graduation, already had a job lined up at a tech company, and quickly realized that a secure job really is not as secure as you would think. It was 2009, which is when the world started to come to an end from an economic perspective, and the layoffs started to become a very common thing in the corporate world. So I started seeing all these people in my office get laid off, and thankfully I actually was not one of the ones. But it really kind of opened my eyes in terms of what it means to have financial stability, financial freedom. And that's when my journey in the real estate world began. I started reading all sorts of books and educating myself. Ultimately ended up buying a duplex that we house hacked it. We lived in one side, my wife and I, and we rented out the other side. And that was kind of my first taste of passive income. We saw that we could basically live for free in this duplex just by renting out the other side. And that sort of kicked off the our desire to continue acquiring properties. So little by little, we grew the portfolio. We bought a couple more duplexes. This is all in Miami, Florida. We got to a point where the incomes from these properties exceeded the incomes we were generating from our jobs. So quickly, kind of the priorities shift, and decided to just go full time in real estate investing. Left the job in 2016. Thankfully, never got laid off, even though I dodged probably 17 layoff rounds in the 9 years that I was working there. But yeah, I mean, it's been good so far. After a while, I think it was like around 2014, 15-ish, the market in Miami kind of turned, and it became very, very, very expensive to purchase properties, especially if you have a cash flow angle to your strategy. So basically was forced to go into another market, discovered Kansas City, Missouri, started buying up little single family homes in that market for 80 grand, 100 grand, 120 grand. It was still very, very cheap market around that time, very good cash flow. And as the portfolio grew, so did my management company. You realize after a while that this passive income you've been trying to acquire becomes less and less passive the more your portfolio grows if you're self-managing. So that kind of kicked off my property management company, which we have, I think, about 230 units under management today. And about 2 years ago, I was introduced to my partner, Alfredo, he's a Miami guy who moved to Kansas City because his wife was doing her PhD over there. Just kind of coincidentally, we were introduced. he wanted to get into real estate. I was already in real estate in that market. He was in a fundraising role over at the university over there. So we put our heads together. We decided we were going to start a little syndication business. He would raise the money. I would find the deals and manage the deals. And 5 commercial buildings later, we're still in business. So we're hoping to do a couple more deals this year. Hopefully there'll be some deals. And it's all very, very heavy value add stuff, commercial in the Kansas City market. And yeah, we like it. We're in a good place, and hopefully we can continue. So that's kind of the gist of my story. I don't know if you want to dive into any of the details.
Yeah, so we'll dive in. So Kansas City versus Miami. I want to talk about that first because Miami, obviously, high growth market, but like you said, it's the properties become really expensive really quick and more difficult to cash flow. So was that just the main thing? Hey, like we can't cash flow here. We're just going to go and pick another city. Was that the reasoning?
Yeah. Well, Miami's a very unique market because it's very international. You have a lot of foreign investment coming in from Latin America, different countries, and that wealth that comes in from other countries has different goals. If the country of Venezuela goes down and all the wealth leaves that country, they're trying to preserve wealth or defend their wealth. They're not necessarily trying to cash flow. So they'll buy up, Venezuelans will come here and they'll buy up condo buildings and they don't really care about cash flow. So that kind of drives up prices a lot. And if you're a guy like me looking for value add with cash flow component to it, it's really hard to compete in this market. So yeah, I mean, we made the decision after, I think it was like 2 or 3 years where we just didn't do a deal and we were just saving up all this money and we had cash that we needed to invest. And, we decided to just kind of move on from there and find a new market and diversify a little bit. So ended up in Kansas City.
That's interesting to understand that. And that's a dynamic I think a lot of people don't understand is that like depending on what country people are from, if they're investing in U.S. real estate, they've got different goals. They don't have goals necessarily for cash flow. Like you said, they just need a place to put their money, and it's going to be way more safe in U.S. real estate than it is if they're investing in their own country. It's going to get better returns, even though it might be very, very small returns. It might be a lot better returns. I've got some Chinese investors, the same thing. Like their returns in China are negative. And so if they can get any kind of positive, they're excited here. So they're looking at different things, and it doesn't mean it's a bad deal for them. It's a bad deal for you, which makes it very hard. So let's talk, like, why did you pick Kansas City? What made Kansas City an attractive market?
People ask me that all the time, and I don't really remember the origin. I knew that I was looking for, I don't know that I really thought it through very well, to be honest with you. I had a mortgage broker. Yeah, I had a mortgage broker, and and I was telling him, look, I can't find anything. And he goes, okay, well, I have this guy in Kansas City who sells turnkey properties. Why don't you talk to him? And I was like, all right, fine. So I talked to the turnkey guy, and before I knew it, I was buying a house from the guy. For me, I saw it as a relatively small bet. I mean, I was putting $25K down for $100,000 house. So I figured I'll buy one, see what happens. Yeah. Worst case scenario, doesn't really cash flow, and I just sell it and move on. So to say that I really analyzed the market and came to the conclusion that I needed to invest in Kansas City would not be true. Honestly, I just had a phone call with a guy. I was kind of desperate to place money, and I decided, hey, I'll just take a flyer and see where it goes. And it worked out. So I ended up buying a couple more houses from the guy until I kind of outgrew the whole turnkey thing. And then I started finding my own deals. And, I met a realtor and she started sending me deals and stuff like that. So, but yeah, it was kind of a crapshoot, to be honest with you.
Would you recommend that the turnkey, now that you've done it and you've moved beyond it, so you grew out of it, would you recommend that to people?
There's a lot of mixed feelings about the turnkey thing. I think it depends on the market, and I think it depends on the operator. It depends on a lot of things, none of which I analyzed when I made the decision to move forward with the same guy. What happens typically with turnkey people is that they are also managing the property for you, but the management is a little bit of a loss leader. So as long as they continue to sell you deals, they can continue managing for you. But if you stop buying deals, or if the deals dry up, then they have no revenue and their quality of management really goes down because they aren't really making any money off of the management. So what happened, at least with my turnkey guy, is it was 2020, which is when COVID hit, and there were no deals. I mean, like, nobody was doing any deals during that initial lockdown period. So his deal flow dried up and he wasn't able to sell anything new. And then the management kind of went down. And then that was kind of the end of him. When the market rallied after that, I'm sure it made it even worse because these turnkey guys they basically depend on like buying distressed, like super distressed properties at real cheap and flipping them to you. So if the values of properties go up and they're not able to even purchase properties, that also kills their model as well. So you just got to kind of be very careful with like when in the market cycle you're investing, because depending on that, that's when the turnkey is a make or break, or it will or won't work. So I recommend it if you're starting out and you don't really have the resources to like do your own deal analysis and have your own deal flow, but start small and really kind of test the waters is what I would do. I wouldn't go all in and buy like 10 houses all at once, because a lot of the turnkey guys are really bad quality.
Yeah. Yeah.
I don't even know if they still exist
advice
nowadays, honestly.
Honestly, yeah, that's a model that you're probably right. It's gone. Probably not completely gone away, but very difficult because, quite frankly, finding a single family house to flip to somebody, have enough margin there for the profit, and still have enough margin to have a solid rental cash flow. That's difficult. That's difficult to do. So, and now what you said you're buying commercial properties. What kind of commercial properties are you buying in Kansas City?
Yeah, so okay, Alfredo and I got hooked up in 2021, early 21, and our intention was to buy multifamily. We wanted to buy, I was a residential investor, so our intention was to buy multifamily, but the market was already crazy. So as we started to analyze deals, this is the middle of the pandemic, people are still working from home. There's a lot of uncertainty in the market, but for some reason, multifamily was like rallying. We couldn't find deals, so we ended up pivoting and we decided to go into commercial. And we bought a couple of office buildings, which, in the middle of a pandemic when everybody's working from home, to start buying office buildings was a little bit of a risk to take. And office real estate was like very distressed because these landlords had gotten their ass kicked during the pandemic. So there were some deals to be had. We took a flyer and we purchased 2 buildings in the first year. It was in 2021. They were both office buildings, super distressed. One of them was 100% vacant and had been overrun by like crackheads and homeless people. We got them for real cheap and fixed them up and rented them, man. I mean, it's been really good. People are back to work in most places, so we sort of rode that wave back up. And office still being a very boring, very black and white, and not very exciting asset class, to be honest with you. You're renting out a square with carpet and white paint.
Yep.
Has been very steady for us and has been relatively lucrative. So we've done 2 of those, and then we did a couple of retail strip centers in Kansas City, one of which was super distressed, 100% vacant, the same kind of deal. So we're fixing that one up. We're in the middle of renovating it, and we've got we got a good process. We got a good leasing process. Alfredo is he's the boots on the ground. He leases all of our properties, and then we have another partner that we brought on later. His name is Jake, who's a commercial broker here in Miami, and they kind of tag team on the leasing side. That's kind of the biggest challenge on a commercial is leasing. In residential, you just kind of put up a for rent sign and you get 20 people applying, but in commercial you really have to work for the lease. But once you get somebody in there, you basically have them for the long term, provided that they don't go out of business. So yeah, we got a bunch of buildings and we just kind of had to pivot. We had to pivot out of multifamily because it was expensive and the deals were in office at the time and everybody was running away from that asset class. So we decided to just kind of take a risk on it and we went for it.
What's anything in particular you guys look for when you're looking for office? It's location, style, what age, anything you guys look for?
High vacancy, because we know we can lease them. We like small units. So we're finding that it's easier to rent a 500 square foot office than like a 2,000 square foot office. So if we can find something that's already been cut up, or that has the ability to be cut up by just putting up a bunch of walls, that's what's been sort of good for us from a leasing perspective. Distress, super distress from like a CapEx perspective, meaning it needs renovations, and bad management. There's just a lot of bad operators, a lot of bad managers out there that just don't make an effort. So you'd be surprised, just putting a little bit of effort into management, how much you could accomplish. Yeah, it's just value add, just your typical, just badly managed property.
Gotcha. Love it. One of the things I like the most about commercial real estate is that you're dealing with professionals, business professionals. And so when you're dealing with the company that's leasing, it's another entrepreneur that you're dealing with. And typically those other entrepreneurs, they have a different mindset, I guess, than, especially if you're looking at your kind of average C-class resident that's going to be renting in your multifamily building, that tenant versus the tenant that is leasing your retail or office space is typically has a little bit different of a mindset. And so it's enjoyable also to deal with those people. They take their lease very seriously. Once they get it, like you said, they stay for long term.
Yeah. And it's night and day, man. The management of commercial versus residential it's so much easier. I mean, there's more administrative work when it comes to commercial, because you've got more bills to pay and more, insurances and things to keep up with. Whereas residential, you just kind of hand somebody the keys and say, hey, take care of the property. But the quality of individual you're dealing with is far superior than the residential world. And it's cool because you get to help a business grow, right? You're offering them a lot of these 500 square foot suites. It's their first office, right? So this is the first time they're getting into an office space. They're growing their business. They're excited. They're grateful. They're happy. They're not entitled. And you get to really play with like the synergies of the tenants, right? Because you have a retail strip mall, you can have a nail salon next to a coffee shop, and those two businesses kind of complement each other, because the foot traffic from the nail salon, will go into the coffee shop and help that business. So you get to kind of like create this little ecosystem that sort of like sustains itself and like allows the businesses within it to actually thrive better if you're more intentional about who you put into the different units. So it's a totally different game, and a lot more exciting and more fulfilling. So
yeah, that's a great point though, especially on the retail side. But you want to make sure you're paying attention to who you put into the deals, right? I didn't think about that when I first bought, some commercial real estate, but it plays a big role in it. Like you said, the traffic that goes into one shop is going to feed into the next shop as long as they're complementary businesses. If you have two things that aren't even complementary, that they're probably not going to feed each other. But if you've got complementary businesses in this strip center, it's going to all kind of be good for everybody. So definitely something to be aware of. Let's talk about tech. You were in the tech industry. Now you're in real estate. I talked to some people that are in tech and go to real estate. I want to talk to you about just kind of what you've learned, and what you brought into real estate that was a big benefit from being in the industry.
Yeah, I mean, I'm very analytical. I come from an engineering background. I'm a numbers guy. I have all sorts of spreadsheets, and I'm very, very religious about our finances, making sure we don't overspend, making sure we're conservative. I'm extremely conservative from a financial perspective, just that comes from my engineering background. We probably haven't grown as quickly as we would have because of my conservatism, but I feel like going into like a bad economic time, we're well positioned, because we haven't been making any crazy bets or doing anything crazy. So that's kind of what I've brought over from the tech world. My partner's a lot more visionary, a lot more like, let's do this, let's do that. He brings me a lot of shiny objects, and a lot of times I'm like, nope, and he gets mad at me. But it's like, we got to find a balance between going all in and making sure we're in a healthy place. So yeah, I mean, I think that's that's also helping me in the property management world, because property management is all about systems and creating, as efficient a system or process as possible to kind of keep costs low. And as an engineer, that's all I did, was create systems and make things run more efficiently. So yeah, I mean, it's been a good benefit. There's a lot of people that worked in tech and worked in engineering backgrounds that ended up in real estate for the same reasons. So
Yeah, definitely. What kind of systems do you have in place for your property management that help? Do you have anything like unique and different, or what do you have?
well, you're just your standard property management system. We use Buildium, so we try to do everything as much as possible in there. And then from like a task management, an internal task management perspective, we use Monday.com, because we were finding that so many tasks would sort of like pop up, and we were relying on email, like, hey, you do this and you do that and you do this, and then things would kind of get lost in email and they would never get done. So we implemented Monday.com, where every task is in one place, and if you create it and you don't close it out, it sits there forever until somebody handles it. So that's been very good from an accountability perspective internally, to keep kind of our staff and everybody involved, for making sure everything gets done. Those are kind of the two main systems. And the property management allows for like the automation of payments and the accounting, and all that stuff gets done out of that. So you're not doing any manual spreadsheets for the finances. And that's pretty much it. We have a phone that rings on our cell phones. You can silence it at certain times. Voicemails go into our email. So things are very kind of tech focused and very streamlined.
Love it. What's a mistake that you've made in, whatever, pick a time, it doesn't matter, but what's a mistake you've made and how have you learned from it? How can you teach our listeners a little bit?
Yeah, screen your tenants really well. Don't get desperate and just put in like the first person that applies, because it could cost you money later if the person ends up not paying, or
I want to hear the story.
A low quality. Well, I mean, I have a lot of a lot of bad tenants. I mean, I feel like my tenants have gotten progressively better. Like the first tenant I ever had in the duplex that I was house hacking, I'll never forget her name. I'm not going to mention it, but that her name is etched in my brain, because that woman was horrible. I was a young 23-year-old guy, and she took advantage of me and didn't respect me.
And did you do a background check on her, or was it just that you didn't do a thorough background? What was it?
Well, the background check only gets you so much. Just because the person's not a criminal doesn't mean they're not going to be an asshole, right?
Yeah.
So now what I do is I talk to them. I call them on the phone. You kind of get a feel. I've gotten better at it over the years of kind of getting vibes and understanding if the person's going to be a problem or not. But yeah, you do your standard background, you do your credit check. I don't want to see any eviction history. You got to make sure you make enough money. Show me pay stubs, and I need to talk to the employer. I call the employer too to get a review, like a reference from them. And typically you can sort of read between the lines on what they say to understand what type of person they are. I speak to the tenant themselves, and I have kind of an interview type conversation with them. I ask them just a bunch of simple questions, just very laid back sort of conversational questions, just to kind of get a feel for their personality. And the credit report, you learn to read it really well, because sometimes people have bad credit, but once you start looking at like why they have bad credit, it's not anything that really is a cause for concern. Like there's a lot of people with medical issues and didn't pay their bills, and student loans always bring down your credit score. But if I see unpaid child support, if I see that you had a repoed car, if I see that you had a electric bill that hasn't been paid, or a T-Mobile bill that hasn't been paid, then you're the type of person who doesn't pay your regular utility bills, and you're not going to pay your rent. So you kind of learn to read the credit report in a way that sort of tells you the type of person somebody is. And sometimes even if they have a repoed car or something, if you call them and ask them, hey, look, I see this on this day, and depending on how they tell the story of what happened, you can get a feel for if they're a good person or not. Like if they kind of brush it off or they deny it. I have people who are like, oh, I don't even know what that is. Or if the person owns the situation and tells me, hey, look, I had my car repossessed, I was in a bad situation, I got divorced, this happened. Like depending on the story and the way they tell the story, you can kind of get a feel for the type of person that they're going to be. So you just get better and better at it over the years, the more you get burned. But yeah, that's the biggest mistakes I've made in the past have been just putting in bad tenants that end up I end up having to evict, or they end up leaving and trashing the place, or they end up just making my life a living hell throughout the duration of the lease. So
Yeah, easy to do. And you know what a bad tenant will lie. I'm surprised, I know, but a bad tenant will lie and will fraudulate their, make things up, I guess, along the way. So you might not be calling the landlord, you might be calling their best friend and thinking it's the landlord. I've had that before where, man, it's just the stories. So, um, what's a daily, what's a habit, so something that gets you going and gets you rocking every single day, whether it's morning, evening, midday, it doesn't matter.
yeah, I struggle with daily habits. I try to do the miracle morning, can't do it. And the minute I get up, my kids are, awake and in my way. I try to exercise in the morning. If I can get a workout in early morning, then my day is set. So if I can get up early enough to get on the Peloton bike or do some weights in the morning, then it really kind of gets my blood flowing early, because I do always wake up with my head is spinning and millions of thoughts. So if you can get your blood flowing via exercise, it kind of helps with that. So I've been trying to be real intentional about exercising every day, even if it's not in the morning. That was one of my goals for this year, is to exercise every single day, even if it's just a light walk through the neighborhood or like heavy weights, at least some sort of movement throughout the day, because I spend most of my day sitting at a desk responding to emails and looking at spreadsheets. So getting out there and moving is really helpful.
Accountability time now. Have you accomplished that so far? How are you doing there?
I've been pretty good. I mean, I was looking at because the Apple Watch gives you like a chart that has like every day that you've worked out. I think I've missed like one day in the past like 2 months. And I think that was like a travel day where I just didn't have time and I was walking around anyways. So, and then I think I was sick. I was sick one day. I had like a weird like stomach thing and I didn't exercise. But then what I did was the next day I felt good and I did like 2 workouts. I worked out in the morning and then I went for a walk in the afternoon. So I kind of psychologically, my OCD was driving me crazy. So I got 2 workouts in the next day to make up for. Yeah, exactly.
Love it.
But I've been good, and I'm historically a guy that doesn't exercise and always blows it off. So it's been good.
Yeah, I think it's so important, and even like you said, just that intentionality to get out there and do a walk. It doesn't have to be. So a lot of people, and myself included, think it has to be like this super high intensive workout where you're getting this major sweat on. But man, I'm trying to change my mindset to say, well, look, sometimes you just don't have time or energy for that type of workout. So just get something going. Like you said, you sit most of the day, get moving, get your body moving.
Yeah.
So
yeah, if you can walk for an hour, listen to a podcast or listen to an audiobook or make a couple phone calls, you're doing something at least. So
yeah, love it. Carlos, couple last questions before we wrap here. What's a favorite book?
That's a tough question, man, because my books, I read so much and I feel like my favorite book kind of changes depending on what state of life I'm in.
Yeah, for sure.
So I can't really answer with a favorite book. Right now I'm reading Atlas Shrugged, which is like a 1,200 page fiction novel that I typically don't read fiction, but like I've gotten kind of really into it. So I'm reading that one now. I just read one called Breath. It was all about breathing. I never expected to read an entire book about breathing. It was fascinating. So that was a good one. Rich Dad Poor Dad is the one that got me into real estate, but I haven't read that book in 15 years. There's just so many books, man. I mean, I have my bookshelf. You can't really see it, but it's full of stuff. I read too much. My wife says I need a book budget because every day there's a new book outside from Amazon.
Yeah,
I ordered, piling up.
It's taking up too much room in here. You're gonna have to get a shed for your books, a new addition to your house or something like that. So, yeah, no, I agree with you. You're kind of in different aspects of where you're at. So sometimes, hey, especially early on when you're just learning about the business, that's all you would probably read. A lot of real estate books, a lot of different books on business, and then it turns to maybe mindset, and then Now you got Atlas Shrugged, which is a very interesting, intriguing fiction book. So yeah, I agree. I'm always just doing the same thing into different kind of things at different times. So saying, hey, what's my favorite book can be challenging for sure.
Yeah, totally.
All right. So last question. What are your 3 pillars of wealth creation?
3 pillars of wealth creation. Okay. So the first one would be the material side, which would be accumulating cash flowing assets, as many as possible, to maximize the amount of income you can make from your existing wealth. And I use real estate as that vehicle, or that as the vehicle for that pillar. Then the rest, let's see, 2 more. Let's go with some immaterial stuff. The second one I would say is probably how you manage that wealth. So frugality and conservatism when it comes to spending, making sure you're not allowing your lifestyle to overtake your the first pillar, which is the income you make. So you have to keep that balance, and it's very tempting once you start making money to start spending the money on material things. So if you can keep your frugality and stay humble and stay smart about the way you spend, that's how you maintain the wealth. So on the first side, you're building the wealth, and you got to maintain the wealth. And then the third is enjoy the wealth, man. It's hard to be present. I'm so used to go, right? The next deal, the next problem, the next thing, that when the weekend comes or the vacation comes, you need to be able to disconnect, right? So it's more of a mindset. That third pillar is more of a mindset, because you spend all this time building the wealth, and then you spend all this time preserving the wealth, but then you don't spend any time actually enjoying the freedom that wealth gives you. Again, it's very tempting as a businessman to just be thinking about business and thinking about the next deal and not stopping and being present. And that's the most difficult pillar, at least for me right now, is making sure that when I'm home with the kids, I'm not looking at my phone, checking my email, or I'm not thinking about something else, that I'm actually present. And when I go on vacation, that I don't feel guilty that I'm on vacation, that I actually enjoy the vacation, not thinking that I need to be back at the office producing. That's been the most difficult, at least in this stage of life for me, but I guess I'll go with that. So you got wealth building, wealth preservation, and wealth enjoyment, I guess, or wealth.
Yeah, I love it. Love it. Definitely. Awesome pillars. Well, Carlos, look, this has been awesome. Anything else you want to add? Anything that's you've been like, hey, I got to say this on the podcast?
No, man, I think we covered everything.
Okay.
If you're thinking of getting started in real estate, just do it. There's probably some deals to be had now, since it seems like we're going into a little bit of a slowdown. So just, stay vigilant and don't be scared to pull the trigger if something comes up.
Yeah, be patient out there. There's deals that are around. There's deals that are probably going to be coming, but like you said, stay vigilant, stay active, continue to look, and you'll end up digging up some good deals. So,
yeah,
Carlos, how can our listeners reach you? How can they get in touch, learn more about what?
You can have Instagram. You can DM me there. The handle is the Carlos Rovira. I had to put the word "the" before my name because somebody else took Carlos Rovira. So it's the Carlos Rovira. Just hit me up there. I'll respond. So yeah.
Awesome. Carlos, again, really appreciate it. You have a fantastic rest of the day.
You too. Thanks, man. Thanks for having me.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com,
and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.